I made $146,000 last year, and I did it using this one simple strategy I'm going to share with you in this video. Now, this strategy has a 91% win rate proven over 2 years. It is fully mechanical, so the rules decide it, not your emotions, and it makes money when the market stays in a range. So even if it's bearish or bullish, it could profit. It only uses one ticker, which is SPX, and your risk is defined before you ever enter. You don't need to stare at charts. It only takes a few minutes a day, and it works with a small account. And it's simple enough for complete beginners to get started. Now, this strategy is called an Iron Condor. And an Iron Condor is a 4-legged option strategy where you first sell an out-of-the-money call and you sell an out-of-the-money put. And then to protect yourself, you buy a further out-of-the-money call and a further out-of-the-money put. And by doing this, you collect a premium or a credit up front. And what you're betting on is the fact that price is going to stay in between those two strike prices that you picked for you to get a max profit. Now, what you're seeing on the screen is a model of an Iron Condor in real-time prices using SPX. So you can see on the chart here that I'm going with a 1 day to expire. So today, as I'm filming this, is the 13th. And we are going, the next day is when these options are going to expire. And you can see that the current price of SPX is right around 7,800. And what I'm doing is I'm selling the 7770 put, and I'm also selling the 7830 call. And then I'm buying the 7835 call as protection, and I'm buying the 7765 put as protection as well. And so you can see that this forms this kind of horseshoe-legged profit. Okay, and what this means is as long as price stays between 7767 and 7833 at expiration, which is tomorrow or the next day, then I'm going to collect a max profit of $245. And if I'm wrong, if price goes all the way down or all the way up, I'm going to lose $255. Now, what you can do with this strategy is you can go ahead and move these strikes a lot further out, and you're going to notice what happens to this exact strategy. So let's say I move these all the way out a little bit further, like this. You can see that the max loss went up a ton to over $780, and the max profit went down to $220. And you may say that doesn't sound like a good risk reward. But if you look at your break evens, they also expanded quite a bit. So now all I need is price to stay in between 7732 and 7847 for me to collect a profit. Now let's actually model this out inside of Brokerage so we can see what the numbers actually look like. So you can see here on the puts, we're selling the 7735 and buying the 7725. So if I head over here and I go down, we can go ahead and look for the 7735 and the 7725. So I'm going to put on all the strikes here, and we're going to go ahead and scroll up, and we're going to go ahead and search for 7735, which is right here. We're going to go ahead and sell that put, and then we're going to buy the 7725 as protection. And then if we go back and take a look, we have the 7845 and the 7855. So if I go back here, we can head on over to the 7845. We're going to sell that, and then the 7855, we're going to buy that as protection. And you can see right here, we now have a spread where the credit is about $1.90, right? Which means if we profit on this trade, we're going to make $190. And you can also see our max loss about $815. Now, you may say that's not a good risk reward. However, over here on the left-hand side, you can see this POP, that stands probability of profit, is sitting at 71%. And what we can do is actually model this out on the chart so you can see what this actually looks like. So we're going to use the short calls we're doing as our break evens. So we have 7845 and we have 7735. So if we go to SPX, we're going to go ahead and take a look at 7745, which was right here. And then we're going to go ahead and also draw in 7835, which was right there. And again, those were the same strikes that we used. You can see 7735 and 7845 like that. Actually, I just had it mixed up. We're going to go 7845 like this, and then 7735 like that. Beautiful. And you can see as long as price stays in between these two black levels here, I'm going to collect a nice profit. So there's a lot that can happen for me to profit on this trade, right? Price can sit right here and stay flat throughout the rest of today and tomorrow, and I'm going to collect a nice profit. Price could even go all the way up above my level and then come back down in between these levels before it expires, and I could collect a profit. Or price could even go down, even just a little bit, and I'm still going to be in profit. So no matter what the markets do, as long as it stays within this range, I'm going to be collecting a max profit, and that's where the edge of this strategy comes in. Now, I want to break down what this backtest actually looks like, because if you go, you can see and set up your type of SPX Iron Condors in a million different ways. You can use different strikes, you can use different widths, right? There's a million different ways to create this. But this exact setup right here that I want to show you is what I did to help collect over $146,000 in profit. And you can see this is a 2-year backtest on this exact Iron Condor, which I'll share with you in a second. And with one contract, just one contract, it did about over $13,000 in profit. And you can see it had a 91% win rate. The average winner was $63. The average loser was $310. And overall, it looks like a pretty solid P&L curve. And if we head over to the monthly P&L, you can also see that there's only a few months throughout the year where this ended up actually having a losing month. Overall, it ended up looking pretty solid for most of the past few years. And so this is what the actual setup criteria looks like for this exact strategy. You can see that this every single day would open up an SPX Iron Condor at 3:02 p.m. Eastern time with an option that expires the next day. So these types of trades were overnight options trades where we'd get in towards the end of the day and try and close it the next day. And what we would do is pretty far out of the money calls. So we would sell the 0.1 delta on the call and the put, which is pretty far out of the money. And then we would buy $10 wide spreads. So to give you some context on what that would actually look like, if I went to the 0.10 delta over here on the left-hand side, it would be this strike, the 7705, and then we're going to get 10 points spread width. So we're going to buy 10 points for protection, which would be right there. And then same thing on the other side, we're going to go ahead and look at this column for the 0.1 delta. We're going to sell that, and then we're going to get 10 points out. And you can see overall, this one has, again, a $125 max profit, about an $870 max loss. And now you can see the probability of profit is actually 81%. And you may ask, how is it a 91% win rate strategy when the probability of profit is 81%? Well, the answer is that this number is not static. You can see this number actually changes throughout the day. And I'm filming this before the end of the day, because you got to remember, this exact strategy right here gets into a trade at 3:02 p.m. Eastern. And there's still a few hours to go until we get there. So that probability of profit is going to rise as long as price stays around that mid area of those two zones. Now for this exact strategy, we went with a 30% take profit as well and a 200% stop loss. So you can see why it had a pretty high win rate. Again, we're taking profit a little bit early and we have a pretty big stop loss, but it is protected in case we don't blow up the entire account, and we're not going to lose a huge chunk of profit. And all the stop losses that we do are based on the actual credit. So if we were to get in this at, let's say, 130, that means a 200% stop loss would be at 260. So the max loss on here would be at $260. It wouldn't be the 870 that you're seeing. So even though there's a pretty heavy max loss on this, we're getting out within a reasonable stop loss to ensure we're not going to hit that. And because we're trading Iron Condor, which is a low volatility trading setup, we're going to skip any crazy volatile days like FOMC, and we're only going to trade this when the VIX is between 0 and 30. So if we go and take a look at the VIX, you'll be able to see that this thing has been a pretty crazy monster, and it's actually been falling off a little bit lately, but you can see once in a while we get these crazy huge moves. So anytime it gets above 30, we don't want to touch it. We don't want to mess with it. We just want to be trading this when it's in a low volatility environment, which is really good for this type of strategy. Now, if you are someone like me who doesn't have a lot of time to trade and wants to be able to trade this in a completely automated setup, then this is for you. Because you can see that I have created this exact trading strategy into an automated trading bot on this OptionBots platform. And because of this, I was able to run a backtest, see how it performs, and clone it live into a bot with my real brokerage account. Now you can see I already have this bot cloned as a live broker, so I'm not going to clone it again. But what I could do is simply build this exact strategy in this bot. What I could do is head over to our AI bot builder. I can go ahead and type in exactly what I want. So we want a SPX Iron Condor, and we want a delta of 0.1 with a 10, let me just do this, 10 point spread width. We also want a 1 DTE, and we want to enter at 3:02 p.m. Eastern time. And this AI is going to go ahead and just build this exact bot for us. And it's going to go ahead and do that. And we're going to see exactly what else it needs from us. So it's going to say how many contracts. We're going to go with 1 contract just to keep it simple, just to keep the risk pretty limited. And then we're going to go ahead and see if it's anything else that we want to add. So yes, we want to add a 30% take profit. We want to add a 200% stop loss. And then we also want to add to not trade during FOMC. And if you remember, we had the VIX should be between 0 and 30. And there we go, just like that. This is going to take everything that we took from the strategy and turn it into a bot. And then we can go ahead and click right here. And then if we want, we could either create it as a backtest or create it as a paper bot, which I'll do right now. And it's going to go ahead and build that for us in minutes. And just like that, I can go ahead and open up my bots page, go ahead and see it right here. And then I can just go like this and turn it on like that. And now we built this exact strategy. It's going to auto trade for us in a paper trading account. And again, I could have done this with my live broker if I wanted to. So if you want to be able to run this exact strategy, I'll leave a link in the description to sign up for the software. It's a pretty small monthly subscription fee just to get you going, and you can build as many bots as you want, backtest as much as you want, paper trade, and turn them live. And this was one of the biggest reasons I was able to earn over $146,000 last year simply trading options. So I hope you enjoyed this video. Subscribe if you enjoyed it and you want to see more videos like this. And make sure to sign up below if you want to give auto trading a shot with OptionBots. I'll see you there.